Hey, welcome to a Wiser Retirement podcast. Leaving a financial legacy isn't something that happens by accident. It takes planning. We've put together a guide with 7 steps to leave a financial legacy and have made it available for free on our website. This guide covers designing your legacy, estate planning, financial education, and protecting your legacy. The link to download 7 steps to leave a financial legacy is listed in the episode description, or you can go to wiserinvestor.com, scroll to the bottom, and find it there. Now on to today's episode.
Welcome to a Wiser Retirement Podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith, and today I'm joined with Jordan Sudi of Sudi CPAs. Jordan has been a guest on this podcast many times now. We had a whole quarter of Jordan, which we loved. It was a favorite quarter.
It was my favorite quarter too.
So, welcome back, Jordan. We are still doing our podcast remote. We've had to shut down the Wiser office. We're in our 3rd week of no air conditioning. And gosh. I'm actually down in Tallahassee this week for my son's golf tournament. And I passed through early Sunday morning because I'd forgotten my iPad, and the thermometer inside said 87.7 degrees at 7:30 on a Sunday morning. So we hope that we can get something fixed soon, but right now, we're just having a hard time finding parts and can't even find a replacement. They're hoping to find a full unit replacement by the fall. So unfortunately,
by then, you won't even need it, right?
By then we don't even need it. Yeah. So I wish we owned our building. We don't. It's an old historic warehouse in downtown Marietta. Unfortunately, a great family owned it for I guess 2 generations, and they sold to an Atlanta firm, and we're having to now seek legal counsel to get the air conditioning fixed. That's how bad it is. So it's very frustrating because our job is to do podcast, right? No, just kidding. Our job is to do financial planning for hundreds of families, and this has become a very big distraction. But thank goodness for technology. 2020 was a great year to test all this stuff out, and we all got back to the office. And now everything, I feel like everything is just melting away right now. But anyway, welcome back, Jordan. Today's topic is, we're still sticking with the legacy planning theme for this quarter, and we're starting a series inside that on how to build a team. Last week we talked about choosing a financial advisor. So excited to have Doug Butler on next week to talk about how to choose an attorney. But today we're going to focus on how to choose a CPA. And I guess, the question we get from a lot of people is, why do we even need a CPA? There's just TurboTax out there, and you guys probably hear that too, right? So why do you hire a CPA?
Well, especially when it comes to legacy planning and estate planning. I mean, tax in itself is complicated enough, but you add in this whole nother layer of additional filings, additional forms. It's complicated for us as professionals. So I can't even imagine, stepping back and not having the knowledge I have of it. It's exceptionally complicated. And with tax law changes, you need somebody who is on your side, staying knowledgeable about all the many changes that are happening, and can give you good advice so that you're not putting yourself at risk or in trouble for any reason whatsoever.
Yeah. Tax returns, it can be very simple for a lot of people, and TurboTax is probably fine. But when we're talking about legacy planning, we're talking typically about a client who has some fairly significant assets,
right?
And there's a lot of moving parts. So your Schedule D, your Schedule C gets a lot more complicated, and so they would never think about why they should hire a CPA. They want someone looking over their shoulder to make sure that things are filed correctly. And honestly, that's partially of leaving a good legacy. We've talked already about leaving a legacy even outside finances. But, inside finances, as far as legacy goes, is leaving everything buttoned up, right?
Right. Yeah. And I love that you talk about having a team, a competent team, because I think that's our favorite way to work, is in conjunction with an attorney, with a financial advisor. Because we only have one side of the frame here. You guys oftentimes have the full picture, but we come in with our tax 2 cents and it's great to have a full team in place. That way, everything is safeguarded. You're making correct decisions with all stakeholders in mind. It's great.
Yeah. And that's part of what we talked about last week in the podcast was, a financial planner, a good financial planner that's not selling product, is there to really be the quarterback. And I don't always have all the tax answers. I understand capital gains tax really well. I understand 1031 exchanges with real estate, when to recommend those. I understand, tax loss harvesting and all the things related to that side of planning. But sometimes things get more complicated and we need an answer. And so that's why having a CPA and you and your team being able to lean on, and the clients that use both, it makes it even easier because you already know their situation. I already know the situation. And a lot of times we converse back and forth about what to do, and the client doesn't even know it. The client's the client's just home sleeping soundly, hopefully resting, and we're working hard for them. But yeah, I mean, CPAs, I think they're, a lot of times people think, oh, my CPA saved me so much money on my taxes, and that just, I hate it when people say that. To me, it sounds very ignorant. Because you can have CPAs miss something, I guess, but ideally it's a square peg into a square hole. I don't think there's anything called creative accounting. Right.
I completely agree. Yeah. And yes, everyone wants to save on tax, but I think you got to do it correctly. You've got to do your taxes correctly. You've got to meet all those filings. You've got to make sure you're reporting everything properly and where it needs to be. And I think of one thing that people may not know, and I actually was working on it today for a client. We had a client who passed away in 2021, and it's very particular about where income goes based on date of death, whether it's on their last individual tax return or whether it's on a fiduciary income tax return. Those are things that the normal taxpayer, the average taxpayer, probably has no idea about. And so it's important that you're reporting things correctly and in the correct place so that you aren't putting yourself at risk for any kind of red flags from any agencies.
I could think of some situations where a CPA could have been used and it wasn't, and it was ended up being a very poor legacy. I've known of people who husbands passed away and they didn't file tax returns for 10 years. We have another situation where a husband passed away and he filed returns, but he just never paid the bills. Yeah. And that's not a good legacy to leave behind. You really need to have had that cleaned up, and maybe a CPA could have held them accountable, or maybe a CPA could have told the spouse, hey, you guys need to pay these bills. There's a lot of things that could have gone differently there. But for those who aren't, knowingly not filing returns and not paying anything, a lot of times people think about just themselves when it comes to finances, and whatever's left over, the kids can have. But in legacy planning, you think about the entire picture. You think about, how do I educate the next generation about money? How do I pass on my wealth to the next generation? And how do I keep it going down the line? And one of the things that we've talked about is having a family covenant, about learning about debt and good debt and bad debt. And this, as a family, this is our mission, right? So what's interesting to me is, in the financial advisor realm, there's so many people that sell product. So they sell, a lot of people sell annuities. I'm not a big fan of annuities, but when you think about when you are buying an annuity, you're buying it because, you're guaranteed never to lose money. You're also never guaranteed to make a whole lot of money, but never really talks about that. but the money that you do make over time, they say, well, that's tax deferred. You don't have to pay that. But when you pass away, all that tax burden then falls into the next generation. And we see that time and time again. Oh, well, I thought you said there really was no inheritance tax for my family. Well, there's not, but there's still income tax on this annuity that they purchased. And it's a horrible way to pass down assets. Horrible way.
Right. Because now you're dealing with probably an entirely new tax bracket that it never would have been in the first place. You're just all this cash due at once. It's not a good answer. I completely agree.
So when you think about picking a CPA, now we've talked about this before. People can listen back to episode 71, how to find the right CPA for you. That was a great episode of doing that, but doing that action. Episode 70, actually, 10 important things to know about taxes. We talk about that as well. But what do you think is a red flag if you're going to interview a CPA? What's a red flag?
Oh gosh. When you're going to interview a CPA, maybe if they're not thinking about the full picture, the full planning, they're just trying to get you to, do the forms and that's it. I mean, that's not your guy, or your girl. You want somebody who's trying to get to know you, get to know your full financial position, get to know your goals, get to know your family, your financial advisor, if you have one, your attorney, and really understanding the full picture so that they're able to recommend good, sound tax advice based on your legacy, your goals, your cash flow needs, and all of those kind of sum together. So when you go to a CPA or a tax professional and they're not thinking about those things, I would personally, that would be my big red flag.
Yeah, I think there's a lot of tax mills out there. So they prepare returns to get their few $100s to prepare it and move on to the next person.
Yep. And you don't hear from them. Yeah. You just, every April you're chatting and that's it. You need somebody who's there for you year round that can support you, your questions, your meetings that come up. You need
and someone who understands your industry. So we have a lot of business owners that listen to our podcast, and you got to have a CPA that understands the type of business that you're in. And some businesses are interchangeable. If you're selling widgets, you're selling widgets, right?
Right.
But, I ran into someone who needs a new CPA because they feel like they're missing out on farm credits, but that's not your guys' specialty. So you wouldn't take them on because we don't do anything with farms.
Right. Yeah. But I mean, I'm sure there's someone who, we're in Metro Atlanta. You're probably not going to find the greatest farm CPAs.
We're going to have to go down to South Georgia somewhere, middle Alabama, and help find this person the right fit. But yeah, it's understanding what's happening. Before the tax laws changed in 2017, airline pilots, right? I felt like that they needed to find a certain CPA because they had a lot of credits they could claim based on what they do for a living. Now those credits have mostly gone away. You just file the return as normal. But so it's just understanding what it is that you do and making sure that your CPA lines up with that. You guys do some really complicated returns, but at the same time, you also do a lot of simple returns because, at least for our clients, your complicated part of your life is probably coming to an end. You're liquidating the business, or you're passing it on, or you things are getting simpler. Thank goodness. Right. But it's still important to have someone dot the I and cross the T. What do you think what do you think the average person is missing by not using a CPA? Is there certain liability with online because they offer guarantees and such if you get audited?
Right. We have a lot of clients who they previously were doing their taxes themselves and they feel like things have just become a little too complicated. And so now they're turning it over to a team, a CPA. Mm-hmm. I think people are just really missing like that planning piece, the piece to really make sure they're staying on top of deductions, credits, planning ideas, because TurboTax isn't giving you that. Yeah, there's somebody you can chat to if you have a question on how to input, something. But we have, clients recently who have all these new rental properties and they're like, yeah, I could do this through TurboTax, but I want to talk to you guys about it so we can plan. And so I think you're just missing having that person, a personal person who has experience with clients like yourself, to give you good sound advice and help plan for the future, and also make sure you're doing things correctly. We don't see mistakes all the time, but we do sometimes see mistakes coming from previous online preparers. So you want somebody who's gonna back you and do a good job.
Well, you're only as good as the computer can check you there.
Right.
And the computer doesn't know your situation.
Right.
I think the biggest advantage that I see our clients with your firm is when they're trying to make decisions. So, we're in a situation, let's say with a client who has multiple properties and they want to move from one property to another property. And so one property is a rental, one property is not a rental. So it's going to, no property is going to stop being a rental and the old property is going to be a rental. And you have all these decisions, and to understand what happens with all that. before you
Right.
actually do it and go, oh, that's what happened when I
Right.
made this change. Or
Right.
it's someone who, we've had a lot of prospects come through our office recently who just outright liquidated investment properties. The market's really high. And it's like, why would you do that? Because
Right.
you could have liquidated it. And if you had planned properly, you could have done a 1031 exchange and you
Right.
could have bought something else.
Right. Yeah, completely
And
agree.
then you could have passed all that tax on to the next property and keep deferring it. And
Keep deferring. Yep.
again, going back to our legacy planning theme, that's just tax has been eaten up that may not have ever had to be eaten up. It could have just passed through generation after generation and never had to be paid, right?
Right. Completely agree. Yeah. I mean, we had a client a week ago who emailed us, hey, I'm thinking about selling my rental property. Can you help me calculate the capital gains? That's easy enough. I can do that. A calculator can do that. TurboTax can do that. But then we're saying, wait, before you do that, are you wanting out of the rental game? And she said, well, no. Like, well, okay, we've got some things we can put into play here before you make the decision to sell. So yeah, that's absolutely a piece that's important for right now in your life, and also when you're planning your legacy, deferring the tax and making a plan for the future.
Understanding when you're liquidating a business, that's another angle that I see for CPAs in the planning stage. You got to remember, planning happens before the return gets filed. The return gets filed. That's a machine can do that. Machine can file a return. It's the planning is where the value is, the value add. The same way for investing, quite honestly, I think robots can do investments now. We even have a robo advisor, FlightPath, built off the Betterment platform. It just does its thing, works good, almost keeps up with our portfolios. But the reality is that it's the planning that has the value.
Right.
And so that's what people are really paying for. And that you don't do that in April. You don't do tax planning in April. In April, February, March, and April, you do your filing. But in September of the year prior, you can do your planning.
Absolutely. Completely agree. Yep. And the more you work with your CPA, I mean, the better they get to know you, the better they get to know your goals, and the better planning you can do to really safeguard yourself.
Yeah.
And another, I want to touch on this when you're looking for a CPA. I mean, I know that people come into our office all the time, and I know your guys as well, and they found their financial advisor, they found their CPA, but they need the rest of the team. And so I highly encourage your clients, that have found their financial advisor, ask about competent attorneys and ask about competent CPAs, because I feel like that's where you get the best advice and the best referrals to really form a cohesive team that works well together.
Yep, absolutely. You guys are the only CPA group that we work with, but we do have multiple attorneys because each family needs something a little different. Sometimes there's your basic wills, and then other times it's family limited partnerships, which is a whole different ballgame. Or it's selling your business. That's a different attorney. So you have to assemble the right team for where you are now. So if you have a business and it makes $100,000 a year, this might be there might be a good team for you. Your current team might be working just fine. But when you pass to $1 billion in sales, that's a whole different ballgame, right? And so your team has to evolve based on how your family's involving and in your business. So that's important as well. And
I think to touch on that as well, I mean, we don't have hardly any clients who have taxable estates right now because of the high limits, but it's easier to get something out of your estate at the beginning than once it's already in there, so when your business is making $100K, but you see it go into the moon and making $1 billion, you got to get it out when it's $100K, as opposed to at $1 billion, it's a little too late. So that's where building that competent team and making sure that you're thinking about that ahead of time can save you big time in the long run.
Yeah, absolutely. Well, Jordan, thank you for your time today and coming back on and talking to us. And thank you for being a part of our team, for ourselves, myself, and our clients as well. Always good talking to you.
Yeah, always a pleasure. Thanks, Casey.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening, that way you don't miss any new episodes. We would also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. We would love to hear from you. This episode was produced and edited by Lilton Moore. This podcast is strictly for informational purposes only and is not to be considered as investment advice or a solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investment advisor with the SEC. The host and/or guest may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guest of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.